Jai Shri Krishna. Let's start a discussion on very important topic and a very hot topic, and it is at the future, the quantum computing future in the financial modeling. So what are the roles and how the quantum computing will help to the financial modeling, and what the system we are going to implement while we are doing to financial modeling for the quantum computing. So discuss on these very important topic. So let's start a discussion. Before that, I'll request you, if you like my videos or my channels and my efforts, to do like and subscribe my channel, so that motivate me to create more such videos for you guys. So let's start discussion. So let's first, I'll give you the introduction of quantum computing. So what is a quantum computing, and why it is an importance, and what problem it's going to solve. So use the quantum mechanism. It is at the superposition and entanglement to solve the problem that are interactable for the classical problem, or that is time consuming or require huge amount of time to classical problem to complete these problem, but counter computing will do within a second. It is at the very fast way. And also the classical computer will work on the bit basis, and the quantum computing will work on the basis of qubits. So let's, a classical are bits, either the 0 and 1, but the quantum computing are the qubits, and it can be work on the logic of 0 1 and the both simultaneously. That is, and the superposition, it is and the advanced technique, it works very fast. Okay. and the and the promise, the potentially exponential speed up certain type of calculations. So while in the current system we do the portfolio optimization, Monte Carlo simulation optimization, or the Heston techniques, to do the decision tree. So they this the methodology, the classical computer, the binary or the bytes computer will take time and maybe not as accuracy we wanted. So if we do that thing in quantum computing, the speed will increase and the accuracy will high. And then it is an a new tool to component to replace the classical supercomputers. Okay, that's are the things. So let's move on the next slide. That is the challenges of classical financial modeling. What are the challenges that the current the organization face in the classical financial modeling? So computational complexity, obviously the classical model will take time, and there are the huge or the large algorithms, or if we work on the the data fetching of the big banks in India, there are the lakhs, the 68 or the 70 or the 80 crores customer, and their million and trillion transaction. So to compute there, or to do the alert generation, or to do the optimization, to do the transaction monitoring system, so classical computer are not sufficient, and they are the time consuming to perform certain tasks. But if we use a quantum computers, that will work will be very fast. And the traditional model for the risk analysis, derivative pricing, and the portfolio optimization are computationally heavy and intensive, so they require huge time. And the large data sets are complex variable to load the bottlenecks. I already tell you that there are the large data set, and it is and the complex to get the data and fetch the data from these data sets. So it will take 2 hours, 2 hours to collect the data from such, or the 1 day or 2 day to collect the data from such databases. So the technique, if we apply on that the databases, so it will help us to collect this data within the 5 to 10 minutes. So, and the Monte Carlo simulation, for the example, can be extreme time consuming to achieve the high accuracy. When we are working the classical computers, while we are doing the Monte Carlo simulation, we generate the random paths, so it will a time consuming, and the accuracy will help if we do that with the help of the quantum computing. So let's go on the next slide. It is a key applications in the financial modeling. So what are the key applications we are doing by using the quantum computing? So first one is a portfolio optimization, second one is a Monte Carlo simulation, and the third one is a risk management, algorithm trading, and the fraud detection, and the cyber security. So let's discuss each step by step. So the portfolio optimization, where the quantum computing is the goal to maximize the return while minimizing the risk. So the portfolio optimization, where we do the different techniques to maximize the return and the minimize the risk. And the quantum algorithm like quantum approximate optimization algorithm. So which also we call the QAOA. So that can evaluate the vast number of potential assets combinations and simultaneously, and that help us what are the optimum portfolio. If suppose we have the portfolio of 10 assets and each have the different risks and the return, so if we apply the quantum computing, so the system will itself give us the optimization of portfolio. So what are the concentration of each asset in your portfolio will give you the higher return and the optimum return. So for there we can use a quantum approximated optimization algorithm technique, and this could lead a more efficient and accurate portfolio selection. And the, the big organization or the big institution can gain more money or to more returns from such portfolio while compared with the other combination of portfolio. And then the Monte Carlo simulation, so it is use a pricing complex derivative and the stress testing. We are using the Monte Carlo simulation to do the complex derivatives pricing, like the vanilla option or the exotic option or the Bermudian option or the American option, or these kind of the options we doing to use the Monte Carlo simulation to generate the random path. But if we use a quantum amplitude estimation method, which we call the QAE, quantum amplitude estimation method, for offer a quadratic speed for the classical method, and it increase the speed and it is also increase the accuracy to calculate the price of the derivative. And this means the fewer sample are needed for the sample level and accuracy, drastically reducing the computing times, and it will enhance the efficiency of to do the Monte Carlo simulation. So let's move on the next slide. That is the risk management. The in the risk management, there are the different types of risks in the banking, like the calculation of credit risks, operational risks, or the liquidity risks, or the market risks, or to do the calculation of the the fraud risks or the anti-money laundering, counter terrorist financing. So that kind of risks we apply the Monte Carlo to apply the the quantum computing technique, different computing technique that will immediately or the real time give us it is at the fraudulent transaction or it is at the genuine transaction with the high computer speed. So quantum computer can analyze the massive interconnected data set to identify and model the financial risks with the greater precisions or the greater accuracy. So in the RACI matrix, so it has then the high true positive rate, so that will be able to do. And this could enhance the fraud detection and the credit risk analysis and the market risk analysis, and the system will able to detect while the customer doing the transactions, in between that transaction or within the keep with that transaction, the system will able to identify that is a genuine transaction or the suspicious transaction, and accordingly they will allow the customer to do the transaction, or the criminals can they freeze the account. So the algorithm trading, so there are the the system will create algorithms to do the trading. So the accuracy or the the speed of the such algorithm while you creating the algorithms using the quantum computing technique will increase, and could use the optimization trading strategy by processing market data and identifying the pattern faster than the classical model, and give the appropriate decisions, or help to the humans, or help to the operation manager, or the the analytical person who working on the algorithms to take a better decision and to take a appropriate decision or to take a optimum decision. And then the fraud detection and the cyber security. So guys, there are the the fraudulent or the cyber threats will happen, so quantum computing will play huge role in the cyber security and the fraud detections. So quantum power machine learning can find the suitable anomalies in transaction data that indicate the fraudulent activity, and that identify the is there the fraudulent activity or the genuine activity, and immediately create the red alert to for the system. So conversely, they trade of quantum computers breaking the current encryption methods and it is and the concept of post quantum cryptography is a major consideration for the financial institution, and they will keep in mind and to update their technology like the quantum computer easily break the encryptions which are created in the system, so they are make their system strong. So these are the the use cases of the quantum computing. So let's move on the next slide, which is and the very important the current state of the development and where is the quantum computing in the current state. Guys, in this field you have the huge opportunity and you can beat the economy, or you can beat, there is no jobs in the market, but if you learn the quantum computing you have to get the chance to work in the man company or the top companies or the big four consultancies. So the current state of development, so noisy intermediate scale quantum, so NISQ era. So these are era in now in the the quantum computing. We are currently in the NISQ era where the quantum computers have limited number of qubits and are prone to error and the noise, and they identify such things. And it is an the hybrid algorithm which combine the classical and the quantum computing. Our current approach, a classical computer handle the data processing and quantum computer tackle the computational intensive and the core problem which will get solved by it is an the hybrid algorithm. So computing can work the classical and the quantum computing, so both, but the classical computing will not both work on the both the problems. So these are the benefits and the approach, and we can also apply the the classical computer software or the quantum computing software and enhance the speed, and the core system can also intensive and the timeline for adoption. So the large scale commercial adoption is still a few years away, and it will time to work on the quantum computing, and the focus is currently on small scale proof of concept and the project and the research. The financial institution will focus on this scale to start with the small and to achieve the big scale and the concept within the 5-10 years. The quantum enhanced solution for specific high value problem and expected to emerge, and it will require the 5 to 10 years to completely implement the quantum computing things and long term. So 10 plus year flawed tolerance and quantum computers could lead the word spread and transformation, and there everywhere the quantum computers, everyone will work on the quantum computers and use their the techniques. So these are the current state of the quantum computer. So let's discuss on what are the major player, what are the players in the quantum finance or in the quantum computers, and they are working and they are applying the quantum logic in their this hardware and the software system. So these are the some player I identify on the Google like IBM, Google, Microsoft, JPMorgan Chase, and D-Wave system. So let's discuss one by one. So IBM with its quantum experience and Quisit uh, SDK, IBM is a major force in research and the development in the field of quantum computing, and they are working on to add the new technology in the quantum computing to create the more faster way to do the quantum computing and to increase the cyber security while using the quantum computing. So IBM will invest huge amount. Then the Google for known for its the quantum supremacy achievements. The Google continue to push the boundaries of quantum AI and enhance the quantum technique to increase the quantum team size. And the Google is also investing huge amount, and they know very well in the quantum supremacy. So then next one is a Microsoft. So Azure Quantum provide the cloud access to variety of the quantum hardwares, and these are the also investing huge amount in the quantum. You can go and search on the Google Azure Quantum, and you can see how they are working and what are the current things. And then the JP Morgan and Chase, Goldman Sachs, and other financial institutions are actively collaborating while these companies are developing and test the applications and working on these applications, the quantum computing application. And then the D-Wave system, IONOS and Quantum are also known player in the hardware and software space of the quantum computing. So these are the some player which are working on the quantum computing. So let's move on the next slide. That is the challenges and the road ahead for the quantum computing. So what are the challenges we are facing while implementing or while working on the quantum computing? So technical uh, hurdles. So increasing the number of stable and error corrupted qubits, and there is huge error in the qubits. So it's the time consuming thing, reducing the coherence, the loss of quantum properties, or to add the quantum properties and work on that quantum properties, and developing the robust and scalable quantum algorithm to add some algorithm, increase the quantum capabilities. So these are things which are the time consuming, or the technical hurdles and the tech talent gaps, the significant shortage of experts skills in both quantum physics and the financial engineering. So these are the huge gaps. They are very they are not able to find the candidates who are knowledge in the both the quantum physics and the financial engineering. So if you learn this skill and if you expertise this skill, so you have the huge opportunity to work this area, and it's require the talented and the integration with existing systems. So integrating the new quantum solution into the complex and regulatory legacy system for the financial institutions, and there are the working chances you will get. So the conclusion from this video is that the quantum powered future and the quantum will be the future. So quantum computing is not just a replacement for a classical computing, but a powerful new accelerator, and it will increase the speed of the system. It is at the future for the quantum computing. So everyone will work or use the quantum computing. And then the intermediate future is in hybrid solution that leverage the best both the word and both of the word, the quantum and the classical, and that work on the things, and the financial institution that start the exploring and investing in the quantum technology new will will be the best position to gain a competitive advantage in the futures. So everyone, the financial institutions or the big four or the top or the man companies are started investing on the quantum computing and get exploring the quantum investment and the quantum technology and adopt these technologies in the futures. And the journey is just beginning, and the potential for innovation and immense. So it's not, we can't predict what are the things done by the quantum computing. So let's end of the session. So that's from my side. If you have any open questions related to the future financial modeling, how it will work and what the future will look like, where we need to start, how to gain the under knowledge in the quantum computing in the future financial modeling, how it should work. So guys, I'll therefore help you, and I'll create the path for you to how to go into the field of quantum computing. So it is and the era in the future comes for the quantum computing. Before that, I request you, if you like my efforts, to like and subscribe my channel, so that will motivate me to create more such videos for you. So thank you so much, guys.